Hi, this is Todd Baker, and the purpose of this video is to help explain to you sort of standard items on a homework list that we will be sending you or we have sent you. And I want to go over them for two reasons. Number one, to understand why we need them and sort of help you not only get the information, but get it in the correct format. So the first thing to understand, there's a rule in banking for all residential loans it's called document authentication. And there's certain basic requirements of what meets that requirement that we need to get in order to fulfill that these are actual documents. So for example, for your ID, all we really need is a driver's license, and that's something you can take a picture of your cell phone. Everything else needs to be hard copy in a PDF and transferred to us. It can be transferred to us in a shared Dropbox link that we can send you, which is a secured way if you know how to upload documents, but not everybody knows how to do that well. So if you don't know how to do that, it could be faxed over to us, or it can even be mailed, or you can email it in an attachment if you'd like. Those are some different ways to get the documents over. But this one's easy because that's just a snapshot of your ID. The next one, there might be some credit. So if there's anything that we need in terms of clarification in your credit report, they could be listed in there. There's a variety of items that could be. Usually this is not on your document list. I did have it on this list just because sometimes there's items we may need. The next is income. So let's talk about income. So the basic components of income, if you're an employee, meaning you have a W-2 income, is going to be 30 days pay stubs, last 2 years W-2s, and last 2 years tax returns. And on your tax returns, it's very typical for people to automatically think, oh, where are they in my file? And you'll dig out this file that your tax preparer gave you that's real thick, and it's got a bunch of stuff all stapled together, and it's a pain in the rear end to try to take apart. Sometimes you have to go ahead and do that, but there's an easier way to get tax returns. If you have TurboTax, you can typically go and download the last several years in a PDF format to your computer. If you used a tax preparer, you can email the tax preparer and have them email you your tax returns so we can look at it. And let me tell you why it's so important to look at tax returns. There's certain areas on your tax returns in which you might be deducting legitimate losses that to you don't think affect your income, but from the point of view of qualifying for a mortgage, we have to take into consideration. So for example, depending on the type of income you have, if there's unreimbursed business expenses on your Schedule A, those have to be deducted and looked at. And when we do a loan now, what we do is once we actually get a property and we formally start a loan process, we're going to get a copy of your tax transcripts. And we don't want to find out that you have losses, because losses have to be deducted from your gross income, which would then mean it could change your debt ratio, which could then mean you might not qualify. And so the secret is to design all of the potential surprises out during the pre-approval process. This is what takes your file doing this from just pre-qualified up to pre-approved, or what we do, which is fully pre-underwritten. So the tax returns so it's important to get those over. The other thing is sometimes people have small businesses. You might have something you work out of the house. For example, I've had clients that were law enforcement that did security on the side and were able to deduct expenses, and those were a loss. Those losses on Schedule C have to be taken against income. Now, other things we need on taxes. If you're self-employed, we absolutely have to use tax returns to qualify. What we do is we get personal returns, and then we're going to get 2-year business returns. It might be an LLC, it might be a subchapter S Corp, it might be a subchapter C Corp. All of that can be getting from your tax preparer. That's the easy way to get it. And then, probably if you're self-employed, you'll know what we're talking about, a K-1 along with that. So those are the kind of things we look for on tax returns. Now, when we analyze tax returns, another thing we're going to be looking for is, did you have a tax liability in the last year or 2 years? Because if you did, you've probably paid it off, but we need to make sure it's been paid. So we're going to go ahead and let you know up front, like, hey, let's get proof that you've paid it, or if you haven't paid it, that you're on a payment plan. As long as you're on a payment plan for at least 3 payments, and it's allowed to be included in your debt ratio, and for most loan types. But that's something we need to know. It's not something you want to wait to find out later on and be surprised. So that's sort of income. For the pay stubs and for W-2s, most employers now have a portal which you can go in and just simply download that. And if you need help, call your administrator, your HR administrator, and they can, or whoever runs the website. They can usually help you do that very quickly if you don't know how to do it. It's an easy way to get past your W-2s and pay stubs. Next is assets. Now typically in the pre-qualification, I want to look at all your assets just so I know where you're at, what the best advice I would give you as a mortgage planner, and sort of how to fit your mortgage into your short and long-term financial plan. And that's in addition to making sure we have funds for down payment and closing costs. So that would include checking and savings account. Those are easy to go online and just download those into a PDF. They have to be analyzed as well, by the way. We're looking to make sure there are not any non-sufficient funds. If there's several of those, that's a trend. We want to address that up front and not later on when we're in the file, because that could be a red flag. The other thing is there's certain definitions of what eligible funds are for closing. So for example, you can't take funds off your credit card because those are unsecured funds. You can't use those for closing. So if there's large non-payroll deposits over $500, we want to know what that pattern is ahead of schedule so that you can work on sourcing those, or we can work on an asset strategy so when we go to close, it's really smooth. We also want to look at things like, do you have an IRA? Do you have a 401k? Do you have any brokerage accounts? And get those up front. We might not even need to use those assets, but at least it gives us an idea of what we have available to you and what would be, and it gives me as a mortgage planner advice to really say, hey, this would be a good balanced approach based on your overall asset situation for this particular mortgage. Next is real estate owned. Now, if you have rental property or more than one house, if you have rental property, it'll be on your Schedule E on your taxes. But if you have more than one house, or if we're trying to qualify for a new house while we still own an existing one, we have to get certain documents for the real estate, and they're listed there. But basically, it's the most recent mortgage statement if you have one, most recent property tax bill, the annual property tax bill, your hazard insurance declaration page, which will show the annual premium, and that's easy to get. You email your insurance guy, he'll email it back. In other words, you can take and either download this or have your tax preparer and your insurance guy give you this stuff where it's very easy to go through this very quickly. But that's what we need on the real estate. Property tax, hazard insurance, mortgage statement, and then if there's an HOA, a statement showing what the annual dues are. If there's not, a letter saying, hey, I'm not in an HOA. Now, last, some miscellaneous items. If you've been through a divorce, you have to have a divorce decree. This is real important. This is something that trips people up all the time. It puts a lot of stress on files. We have to make sure there's no child support. We have to make sure that there's no liabilities. Under Dodd-Frank, we're under a huge burden to make sure that all liabilities are in your total debt ratio. So we need to make sure that we look at the divorce decree for that. And the divorce decree means we have to have page 1 through all the way to the last pages. So if it's 100 pages, we need all 100 pages. Even though it might only be one page that's pertinent, we have to have all pages of the divorce decree. Usually they're not that long. They're usually around 30 pages. And it has to be the one that's signed by all parties. You, your ex, and the judge. Most people don't have that copy. Some people do, some people don't. How you get that is you get it from your attorney, or you can get a copy from the courthouse. If you're here in Texas, the courthouses have copies of these you can go get. If they're really, really old and no kids, really old, usually we can get a letter of explanation for those. But let's plan on, you have to get a divorce decree. And last, we listed all the, if you did have a bankruptcy, there's bankruptcy documents. We have to get the notice of filing, all the schedules is what they're called. There's a couple statements, and then there's a notice of discharge. The discharge sets the time frame for the seasoning we talked about, but the schedules, we have to make sure there weren't any other liabilities that were reaffirmed that aren't in your credit reports. We have to look at that. So that's why we need all those documents. Those are easy to get. We show you where to get them from a government website, or you get them from your attorney. Once you get those and scan those in, these things right here should be always kept handy in a file for you for future reference. So that's what homework lists look like. Real important to get this stuff done. It's really about a 20-minute job if you do what I just tell you to do, and you can have it all done, all over to us. This gets us about 95% there to once you find a house, all we have to do is update your income and some of the assets and have our processor and underwriter review it. It becomes really easy. We've designed all the surprises out, and it's a way to fully pre-underwrite your file. That's the way we do it, and knock on wood, my team has a 100% funding ratio, and we'd like to keep it that way. Thanks so much, and have a great day.